Stock market top, market cycle. When to sell stocks. These searches are exploding. And a 150-year-old chart is going viral because it says we're at the peak, right now, not a crash. A top. And that's more dangerous. A failed farmer from 1875 is about to tell you why the smart money is selling. 1873. Samuel Benner, an Ohio pig iron farmer, lost everything when commodity prices collapsed. Bankrupt at 40. But instead of giving up, he studied a century of price data and found something Wall Street missed. In 1875, he published Benner's Prophecies, a chart mapping future booms and busts. Experts mocked him. A farmer predicting markets? Then 1927 hit panic, exactly as his chart predicted. Then 1945, then 1965, then 1981, then 1999, then 2019, all on schedule. Benner discovered 3 overlapping cycles. Cycle A, panic years. Market collapses every 16 to 20 years. 1927, 1945, 1965, 1981, 1999, 2019, 2035. His chart marked them all. Cycle B, good times. This is the danger zone. High prices, euphoria, everyone's a genius. Benner's instruction is clear. Sell stocks and values of all kinds. This is the distribution phase. Cycle C, hard times. After panic settles, prices crater, blood in streets. Benner says, buy stocks, goods, and hold till boom years, then unload. The cycles run independently but intersect at critical moments, and right now, all 3 are flashing the same signal. Look at the chart carefully. The last panic was 2019. Benner's A cycle nailed it. Now traced to 2025 to 2026. It's in the B cycle zone. Years of good times and high prices. That's literally what it says. We're not approaching a crash. We're at the top. Markets are at all-time highs. Valuations are stretched. Retail investors are piling in. This is exactly what Benner warned about 150 years ago. His next panic year, 2035, that's when the music stops. Then 2023 to 2032 hits the C cycle. Hard times, bottom prices. That's your buying opportunity. So the play isn't brace for impact, it's take profits now, wait for the reset. Benner didn't have economic theory, but he discovered what we now call the Kondratiev wave, 50 to 60 year super cycles of growth and collapse. Ray Dalio built his empire on this, the long-term debt cycle. We borrow, expand, over-leverage, then collapse. It takes about 18 years between major resets. 2008 to 2026 equals 18 years. We're right on schedule. But here's the twist. The peak is more dangerous than the crash. In a crash, you know what to do. At a peak, greed tells you to stay in just a bit longer. That's how 1929 happened. That's how 2000 happened. That's how 2008 happened. Benner's chart is screaming, you're in the good times now. Don't wait for confirmation. If Benner's pattern holds, here's the playbook. 2025 to 2026. Peak zone. Start reducing exposure. Take profits. Rebalance into cash or defensive assets. This is not the time to be aggressive. 2023 to 2032. Hard times arrive. Volatility spikes. Markets gap down. You're in cash watching from the sidelines. 2032 to 2033. Hard time bottoms. Everything's 50% off. This is when you deploy. Buy quality assets nobody wants. 2034 to 2036. The next boom begins. You're up 300% while others are still recovering. The cycle punishes greed at tops and rewards courage at bottoms. Now, could this be wrong? Absolutely. Central banks could print forever. AI could change everything. This time is different, could actually be true. But Benner's chart has survived world wars, depressions, tech revolutions, and pandemics. The pattern persists because human psychology doesn't update. Fear and greed. Boom and bust. Expansion and contraction. It's not about economics, it's about emotion. And right now, emotion says, markets only go up. That's the most dangerous sentence in investing. Benner knew this in 1875. Dalio knows it now. The only question is, do you? So I'm taking chips off the table, building cash, making a list for 2032. If a 19th century farmer ends up being right again, and his track record suggests he will, I'll be ready. Comment below. Are you selling at the top or riding it down? Let's see who's right in 2032. Smart money prepares early. Subscribe to Financial History Chronicles and stay one cycle ahead.